Good morning. This is Julie at J Auto Trading Strategies, and it's 6 a.m. on the dot Central Time, Tuesday, April 21st. I'm looking back at yesterday's price action and today, trying to decide what I'm going to do with the market. Yesterday, we got a pop in crude briefly on some stimulus from China. It looks like their economy's in the crapper, just like everything else in the world. Their reserve requirements were loosened by a full percentage point, which was the largest drop by their central bank in 7 years. And this just does not bode well for the world's economy. But because of the stimulus, that of course feeds some activity in the markets. And we had this big rally up on that yesterday from that news. But we have a situation in crude where the May contract here Friday was trading at $55 a barrel, and you roll over to the June contract and you're up at $58 a barrel, which is a $3 premium. So we've got to take that premium off to get back down to $55 a barrel, and that takes us to the breakout level. Let me pull up my 240-minute chart and you can see this better. You can see the breakout area right here where crude took off, and that is right here at 54, 50, 483, 55. So I'm expecting crude to come back to test this breakout level. So this is your breakout pullback. We've got some standard deviation lines that it might pull back to and bounce off of, but the monthly VWAP is right here at 54.34. Previous month's standard deviation line is at 53.52, and you see that we have our stochastic starting to move down. And this was the rollover, and the reason I was a little bit short biased on my intraday level, recognizing that long-term resistance that we're at on the daily. If I pull up my daily, you can see, if I can minimize this a little bit so you can see this, oops. Sorry about that. This is the standard deviation on that yearly that has been holding prices in check. And I was expecting, yesterday to follow the direction of this daily momentum, but I've been following also the intraday pullback of the stochastic on the 240. So really wanting to see if this was going to pop and hold at the 50 line, which it has been. It's pulling down to 50 and sort of stalling here. So this could be, I was wanting to see if this was going to bounce, but it looks like it's going to crash through and come on down. So we could have the D hold on 50 with the K come down for a short pop pullback and a price resumption, which means that price is going to be coming down to support. And where is support? Well, the first support is right here at 56.60. Right here. That's your first support level. Back to my red. Okay, so we've got support, and that's the first logical place to trade this price action to. But I've got my eye on these levels of the VWAP and the breakout level. The monthly VWAP coincides with the breakout level. So I'm thinking that this is going to be really the bigger target that the market's going to trade down to before making a decision whether it's going to rally back up or continue back down. So on the intraday level, how I trade this is I look for my previous value area low and my previous value area high and my range, which is my 1 hour initial balance, And I want to see where price is trading relative to those previous levels. And we've already broken through yesterday's value area low, which is right here. So I'm expecting a down day and to test yesterday's low at the very least, and to range. Today's going to be a down range day, is what I'm going to be trading for today. And that's about as far as I'm going to go into the future, because in crude you just don't know. I've got my eye on that bigger picture around 55, 54.50, but the uptrend on the daily could propel this market and continue higher. The 240-minute is stalling on the 50 right here. So all of this depends on what's going to happen at this support level, this first support. So do we get a bounce here in the continue of the rally, or is this going to push into value and test this previous breakout level? And I think that this second one is probably going to be the what's going to happen. We're going to get an EIA report of another $2.5–5 million build, and it's just going to keep prices down, especially with that 58.55 premium. Well, that's a lot to consider and probably too much to worry about for intraday trading, because you just need to follow price and not your opinions of where you think price is going to go. I cannot tell you how many times I have had an opinion on where I think price should be going, and I'm trading that instead of what price is actually doing. So no matter what my opinion is, I'm going to be trading where price goes. With all of that said, have a good trading day, and we'll see what happens at the end of the day.